Well, for more on Luckin Coffees' IPO and its expansion plans, I'm joined by Sean Ding. He's the co-founder and CEO of GRisk. Welcome back to the show.
Thanks, Rachell.
So, Sean, another unicorn IPO debuting. Now, we've seen recent IPOs from Lyft, from Uber, and Beyond Meat not performing as well as investors expected. What would make Luckin the same or different?
Well, I think for Luckin Coffee, one of the major differences is that in the Chinese market, you're seeing really double-digit growth in the coffee market for the past almost a decade. And Luckin is trying to tap into that market, being Starbucks being the dominant player. There will be some challengers in that market. Luckin is trying to be the one. So I think from an investor's perspective, there is a lot of excitement, but of course there are a lot of risks, as the analyst just mentioned.
And there is also this issue of a lack of profitability. How do you see that impacting this valuation that we've now seen from where it could go?
In terms of profitability, you really have to look at two aspects. One is the demand that they're trying to unlock. Coffee in China has traditionally been expensive and hard to get, and Luckin is trying to break that sort of conundrum for people where you can get a lot cheaper coffee and in a lot closer locations. Another aspect in terms of profitability is unit economics. That's something that we are all watching, and for Luckin right now, they're subsidizing consumers through promotions and coupons. If that's a sustainable model going forward, is still to be seen.
Now, people do need to keep in mind, this is a very young company, barely 2 years old. What do you think of its move to go public in the US at this point in its development?
Well, they have to capture the momentum and the excitement from the investment community, because they've been called the Starbucks of China, whereas in reality, their main competition in China is actually not Starbucks. It's all the convenience stores you're seeing all over Chinese streets and blocks. They're even competing with actually office coffee, because people in working offices are ordering coffee from Luckin instead of drinking their office coffee for free. So that's the competition they're actually facing. But the term that they are the Starbucks of China is driving up a lot of investor excitement, and they're definitely trying to capture that momentum in the short term.
And that is quite some crown when someone's saying you're the Starbucks of something. So what would you say are Luckin's biggest challenges domestically and internationally?
Domestically, I would say that the biggest challenge is whether they can actually unlock that demand from China for coffee, because Chinese people are still very much into tea. And although you are seeing a double-digit growth for the coffee market for the past few years, a lot of that growth actually comes from instant coffee. Not all of them are coming from brewed coffee. So, can Luckin Coffee really unlock that demand by making coffee more affordable and more accessible? That is still a big if. It's a big question. Internationally, I wouldn't assume that Luckin would have international expansion plans at this stage, but just in terms of the capital market, in terms of the investment community, I think their biggest challenge is to explain how they can actually profit at a unit economics level after they stopped subsidizing and creating all these promotions and coupons for consumers, because that's not going to last forever.
Now, even though they do get compared to Starbucks, they do have their own edge when it comes to being a lot more high-tech in terms of how people order their products. What sort of edge do you think Luckin is going to have over Starbucks?
Well, that's really what the valuation is based on to a great extent, because Luckin requires you to download an app in order to actually purchase coffee. You can't just show up at a store and then pay credit card or cash for coffee. You have to download that app first. And that transaction, the download of that app, is the backbone of Luckin Coffee, in my personal opinion, because what you're looking at is that Luckin is gathering a lot of consumer data in terms of their purchase behaviors, time of purchase, their personality data. A lot of that can be done through this app. So the big data behind Luckin Coffee's transaction data is something that they probably will be using as a competitive edge in the future.
And obviously all this is happening against this backdrop of the US-China trade dispute. As you look at that, how that's impacting the coffee industry as a whole, how do you see that impacting Luckin?
Well, for Luckin, I don't think their main concern is the trade dispute, because they are still tapping the Chinese consumer market. This is the so-called new retail in China. It's relying on internet, relying on the logistics network that China has developed over the past few years. So they shouldn't be overly concerned with the trade dispute between the US, but one thing to watch is the overall consumer demand in China. Again, this is still not convenience store priced coffee. This is Luckin Coffees priced, if it's in full price, is around 20 to 30 RMB. So that's still more expensive than what you can get from your office a water fountain or your office coffee machine. So can that consumer demand sustain amidst the U.S.-China trade war is something that we will all be watching out for.
Indeed. Thank you so much.
Thank
Sean Ding there, co-founder and CEO of GRisk.